Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. You can see the downward action indeed has happened. We discussed yesterday in our update, because even before ADP report, technical behavior, as we said, was bearish, because the swings that market have formed on the intraday charts, it was not the way how usually the bullish performance should develop, and based on the swings that we saw, it was mostly in favor of the deeper retracement. So in the result, although we have hoped that euro will be able to escape a deep retracement, but it seems that it hasn't happened, and now we're meeting with a deeper action. Ultimately, it seems that we have to recall the head and shoulders here. But this is, I would call it as the ultimate step. If market will drop back to the somewhere at the 1950 area, it's right here. Indirectly, with indirect signs, that is possible just because of the divergence. So as you know, usually when divergence is forming, it suggests taking out the low between the tops of the divergence, and it stands right here. And if market will drop right back down to 1950, in this case, theoretically, it could happen. At the same time, I personally more gravitate to 2050 area, because, a few reasons. First of all, this is not the first statistics that have shaken the market. Last week this was the PCI, before that it was another inflationary data, CPI data. So months ago it was the weaker non-farm payrolls release, but all of them have made a relatively short-term effect. So currently, indeed, ADP report was the 1.5 times better than market expects, but this is ADP. We will need to wait for non-farm payrolls, because it could be a bit different. Second moment, in the non-farm payrolls, we have to keep an eye on inflation. So as I said, hourly earnings is a very important part of the report, so keep an eye on it. If in this case, again, it will be strong numbers, probably we will get some more extended downward action. And in general, by taking a look at the technical background, it also suggests that there should be some downward continuation. That's why the nearest level that I would consider for taking the long position stands 2050. But it's not just blind, just not because this is the conference, this is daily oversold, and it's great agreement with this conference. Not only of that, because of that. So we need to keep the level, keep an eye on the level, but also watch for patterns, so on intraday charts. So appearing of the patterns led us to step in. That's actually what we have currently on the daily. So since the deep retracement has started, market has started and formed bearish reversal swing, it makes sense to wait a bit more for a deeper standing level. Let's treat this level as the most probable, where market could start establish upward action, or at least here we should get the bounce because it's rather strong. And also keep an eye on the 1950 in case if market wouldn't stop here and just break it down. But in current situation, this level is not very interesting because today is Friday and it stands significantly below the daily oversold area. So here we're watching just for this range for today. On the lower time frames, 4-hour time frame chart, we have the ABCD pattern here. OP has been hit, that we discussed recently. Even 127 extension mostly has reached with this butterfly. That's actually the part of this ABCD pattern. CD leg takes the shape of the butterfly. Since we have the strong acceleration right to the OP, this is the reason why I suggest reaching to the XLP later. And as you can see, XLP is 2040, perfectly agrees with our conference support here. There's 10 pips difference. and so that will be rather strong support. Completion of the XLP here could give us something like large Gartner's T+2 buy patch and extended the ABCD XLP target inside of it. So this level from that standpoint is relatively safe for a position taken because it carries a little small risk and almost gives the very high probability that we will get the bounce of the first touch. That's correspondingly led us to move stops to the break-even and make this trade with a very low risk. 1618 extension of the butterfly stands also very close to our, and actually agrees with the conference as well. It's 2057. So that's the level that we're watching for next week probably. Or even today if numbers will be even better, or it will be straight downward action today on euro currency. So correspondingly, if you trade on the short side of the market, you like take the short position. If you haven't taken it yesterday, you could consider some levels on the pullback that market could show before and for non-farm payrolls release. So since market has completed the OP here and 127 extension of the butterfly, it might be pulled back somewhere maybe to the 2140 to retest these lows as well, which is important since this consumer price index, personal consumption expenditures, data release lows and agrees with this 2140, 2144 area. So that could be retested before downward continuation. Also, guys, I would suggest you to keep an eye on the levels from this top, from this candle, because this is hidden reaction point on the by Judd Napoli framework. This is frosting candle. I don't have the levels from right here, just because to show you this confidence existence of 2165. But if you will build levels, you will see that the 618 level also stands somewhere in between of these two levels, and also might be important for retesting of our prediction will happen. But intraday scalping, it's not our primary object. Here we're mostly considering daily and 4 time frame charts. So there we will watching for 2050 area. For taking the short position, well, if you feel comfortable with that, and suggest that market also could drop lower, so you could consider some resistance levels where you could think about taking the short position.